One of the most common questions that I get from potential home buyers is how much money do I need to make in order to comfortably afford to be able to purchase a home in San Diego? And the answer to this question might surprise you. While everyone's situation is going to be different, and it's going to be affected by how much money you're putting down, what the interest rates currently are, how much debt you have, and a number of other factors, we are going to dive into some examples today to give you a much better idea of where you would need to be. I'm Scott. I'm a local realtor here in San Diego, and I help buyers, sellers, and relocation clients better understand the San Diego real estate market. The price for a median single-family home here in San Diego County as of March 2026 is $1,060,000. The price for a median condo or townhome here in San Diego County is $660,000. We're going to use both of these as a couple of examples today as we go through and figure out how much income you would need to make in order to qualify to purchase either one of these. Let's start with the single family home. While I mentioned that the median price here in San Diego County was $1,060,000, let's keep our numbers nice and round to keep the math easy. Let's assume that you're looking at purchasing a single family home for $1 million. A lot of people think that you need a 20% down payment in order to buy. This is actually not the case. You can put significantly less than 20% down, or you can put more than 20%. The amount of money that you put as your down payment is going to affect your mortgage payment. The more you put down, the lower your payment's going to be. The less you put down, the higher your monthly payment is going to be. For our example, we will assume a 20% down payment. So if you're buying $1 million property, you're going to put down $200,000, and this is going to give you an $800,000 mortgage. Now your mortgage payment is going to be made up generally of four things. You have what's called your P&I, that's your principal and your interest. The interest goes to the bank, the principal reduces your loan amount every month. Then you have your property taxes, and then you have your home insurance. Depending on the property that you're buying, you could also have an HOA in there, or there could be some mortgage insurance as well. But we're going to stick with these four for our example today. So if you were to purchase a $1 million property and financed $800,000 at a 6% interest rate, your principal and interest would be $4,796. Assuming property taxes of $12,000 a year, that'd be an additional $1,000 per month. And assuming home insurance about $300 a month, you would be looking at an estimated payment of $6,096. So how much money would you need to make in order to be able to afford that mortgage payment? Now, lenders generally work off of ratios or percentages. I'm not a lender, but a lot of times what they're going to do is they are going to take a look at how much money you are bringing in, gross, each month or each year, and they want a certain percentage of that to go towards your housing costs or your total debt payments. So your total debt payments can include your housing costs, but it's also going to include things like your car payment, any credit card debt, student loan payments, personal loans, or any other debt payments that you have each month. Now those ratios can look at a ratio or percentage of your income specifically towards the housing or towards the total amount of debt. So it can vary depending on your individual situation. But generally, lenders are looking at debt payments for housing or total debts of anywhere between 28 to 35% of your gross income. So in order to be able to afford the mortgage on $1 million property in our example, at 28% to 35%, you would be needing to bring in somewhere between $209,000 to $261,000 per year. For our second example, let's look at how much income you would need to purchase a condo or townhome here in San Diego. While I mentioned the median price is $660,000, for our example, let's use a purchase price of $650,000. Again, we're going to assume a 20% down payment, even though we know you can purchase with significantly less or more than that. But at 20% down payment, you would have a down payment of $130,000. So your principal and interest portion of your payment would be $3,118, assuming a 6% interest rate over 30 years. Assuming your property taxes are $650 a month, your home insurance is $200 a month, and we'll assume your HOA fees for your complex are going to be $400 a month. This brings your total monthly payment to $4,368 per month. Using the same ratios that we used for the single family home example, you would need an income of anywhere between $150,000 a year to $187,000 a year to comfortably afford a $650,000 condo purchase. While San Diego is not the most affordable housing market in the country, it is an amazing place to live. There are a few ways that buyers are able to make things work with a home purchase here in San Diego. The first one being dual income. If both buyers on the purchase contract are working and have incomes, you can use both incomes to help qualify for the mortgage. Second is purchasing condos or townhomes. While your dream home may be a single family home, if you're not at the point where you can afford that yet, buying a condo or townhome for a few years to build some equity is a great way to be able to roll that equity over into the purchase of your single family home in the future. There's also some first-time home buyer programs that are available. There are some certain restrictions and qualifications that you'll need to meet, but if you have any questions about that, feel free to reach out to me and I'd be happy to chat with you about that. As I mentioned in the video, there's also different down payment options. 20% is not the rule. You can put as little as 0% down if you're a VA buyer. If you're not a VA buyer, you can do a 3.5% down with an FHA loan. You can also put significantly more than 20% down. If you're moving here from out of state and you have a property that you're selling, and you can take the proceeds from that property and roll all of that over, and you can put a 30, 40, 50% down on your mortgage here to help make that a payment more affordable. Some common misconceptions that I hear from buyers is that you need to make at least $300,000 in order to buy in San Diego. And based on the examples that we looked at today, this is simply not the case. You can look at buying with as little as $150,000 based on the median prices. Keep in mind, the examples that we use today are based on median prices. That means half of the homes, condos, and townhomes are priced below the examples that we use today. So you could definitely look at buying something that is more affordable and have a payment that's even lower and have an even lower income requirement than the examples that we looked at today. Another misconception that I hear all the time is you have to have 20% down, and this is just simply not the case. There are lots of loan programs and options for you to buy with less than 20%. Another thing that I've heard a few people say is that you have to buy a single family home first. This is not true. You can absolutely start with a condo or a townhome, get your foot into the door, own your own home, start building some equity, and a few years later, you can sell that property, take the equity that you've built up from appreciation and loan pay down, and roll that money into the purchase of a single family home. If you're thinking about moving to San Diego and you have any questions at all about your individual situation or about the general real estate market here in San Diego, feel free to reach out to me. I'd be happy to chat through your individual situation and answer any questions that you might have. If you found this video helpful, please go ahead and like and subscribe, and I will see you next week.